traders and market movers. This is The Pulse with Francine Lacqua.
Good morning. Welcome to The Pulse. I'm Guy Johnson in for Francine Lacqua. It is Nvidia Day. Europe is actually going to have to largely react to this, I think, tomorrow morning, as will Asia. But certainly it's a big day for the United States. Everybody is on tenterhooks waiting to see exactly what this key company is going to deliver. The stock is doing very little right now, but if you take a look at options pricing, there's a 10% plus swing priced either way. So you could see significant volatility a little bit later on. I just had a brief conversation with Robert Lee of Bloomberg Intelligence in the last hour. I want to carry on that conversation now and get into the weeds maybe of what we're going to be expecting from these set of numbers. Robert joins us again. Robert, what are you looking for? What are the key kind of takeaways? What are the key areas that you're going to focus on? Is it this set of numbers? Is it the guidance? Tell us what you're looking at.
OK, well, on the reported numbers and guidance, I think the majority of people out there, including my US colleagues who lead coverage on the stock, are expecting another beat and raise. So let's take that for granted. But I think investors are increasingly looking to the medium-term outlook for this company and this sector. So there are two key issues there. First of all, there are the execution issues around the Blackwell production delays that have obviously hit the headlines several weeks ago. So we'll wait to see whether, what the update is there. Blackwell will not impact their revenue in the next couple of quarters, but it is a key revenue driver into next year. So that's one main thing to look at. But I think perhaps more importantly than that, I think it's becoming increasingly apparent to people that the hyperscalers, the very highly concentrated group of large tech platforms that are driving demand for these products, they are monetizing their AI services, but at nowhere fast enough a rate. So really, they need to pick up the pace on that front, because I think worst case scenario, we get a day of reckoning where they'll actually have to slow down and pull back on the capex front. But at the moment, demand is outstripping supply, and I think that will remain the case at least through the end of this calendar year and probably into the first quarter of next year. But, the market always looks ahead. So again, if fundamentally the customers aren't making money, that is a big potential question mark there. OK, but at the moment, this is a supply-constrained market. How much visibility do you think Nvidia really has? I guess, what is a real order? Is it an indicative order? Is it a contractual order? From what we know at the moment, absolutely demand is outstripping supply. Again, the company's locked in this fear of missing out, a sort of arms race between each other to try and grab market share. So that will continue, at least through into the first part of next year. Nvidia has fantastic order visibility on that, and that tallies with what TSMC, their main production partner, is saying as well. There's a real supply bottleneck on the semiconductor side. So I don't expect any upsets on that front. But again, as I keep coming back to, ultimately the customers who are spending $10 billion plus per quarter on capex, if there's no prospect of them monetizing this at a high rate in the near term, then at some point the risk is that they start to pull back that capex, and that could impact Nvidia. OK. Is that a bigger risk for the hyperscalers or a bigger risk for Nvidia? That is a very good question. Well, I would argue it's a bigger risk for Nvidia because clearly it has the market to itself, although Intel and AMD are beginning to close the gap. It's still an effective monopoly. So I'd say the risk, and given the rebound we've seen in Nvidia's stock price after the more recent sell-off, there's still a lot of high expectations priced into it. How would people react on the hyperscaler front? Well, these are very broad-based, tech platforms. Whilst AI may be a major driver of their future growth, there's more to their growth prospects than that. So I'd say Nvidia has potentially got more to lose. Robert, great to catch up. We're looking forward to the continuing coverage from Bloomberg Intelligence into the numbers and out of the numbers. We're also going to have some great coverage a little bit later on. Bloomberg is going to sit down for an exclusive interview with the Nvidia CEO, Jensen Huang. Ed Ludlow is going to be conducting that conversation. I'm going to be staying up late to watch it. It's going to be great. Bloomberg Technology, 11:30 p.m. UK time. I want to come back to Nvidia and its macro implications in just a moment, but I want to talk about another story that is happening right now. Keir Starmer is in Germany. He is meeting Olaf Scholz, the German Chancellor, the embattled German Chancellor. They are going to be talking about security cooperation. I think that's probably first and foremost what Keir Starmer would like
like to talk about. But remember, I think this is the 5th time that these two have met since Starmer has become the Prime Minister of the UK. And that just gives you an idea of the effort that is being made by 10 Downing Street to repair relations with the EU. He is going to be going, Keir Starmer, from Germany to Paris. The Paralympics event a little bit later on is going to be well attended, and Starmer will be there as well, meeting Emmanuel Macron. So this is a narrative that you want to keep an eye on. How it's going to roll out? Well, Germany and France have both got other issues that they need to be focusing on right now. How much traction is Starmer going to get? I think is one element that we need to focus on. But let's get back to what is happening with the macro picture. Sree Kochugovindan joining us now, senior research economist at Abrdn. Nice to see you.
Thank you for having me.
Is Nvidia a macro event?
I think the importance of Nvidia will be the impact on markets later today, whether there's going to be some turbulence as a result of that. And as we saw early in August, market turbulence can be quite relevant for macro, and it can feed into, some policy implications potentially. But ultimately, I think we can look through the events of today, and we'll come back to fundamentals. August is obviously the thin markets, thin volumes, so you tend to get these wilder swings in the data in the markets.
Yep.
But then September onwards, I think we need to be focusing more on the underlying macro trends.
OK, so let's pivot to that and talk about what is happening there. We've got PC coming up on Friday. Do I ignore that? That's inflation. Powell doesn't seem to care about inflation anymore. He definitely cares about the labour market. He mentioned it an awful lot in the Jackson Hole speech. Are we all about the September the 6th payroll number?
I think it's still going to be very important because in terms of the risks to the next cut, we have 25 basis points as our base case. However, there is a risk of 50 basis points, and I think that's where both inflation and the payrolls data is going to be quite critical. So how weak is that labour market data? That's going to be the key question.
What if it's strong? What if it's strong? Because the prior number, and this is going to be August data we get in September, but the prior number was very weak, and as you say, the market freaked out beginning of August, a lot of volatility. Yeah. But there's a strong argument that suggests that it was hurricane affected, it was weather affected, and as a result of which you could see a bounce back. How do we react if we get not another weak number, but actually a bounce back number and a strong number?
Yeah, I think it's important to look at it within the broader context. And you're right, that data that we saw last time, there could have been a bit of an overreaction to that one payrolls number. But we are seeing, if we look at other measures of the labour market, there are clear signs of labour market easing. Disinflation trend is well in play. Hiring is cooling off. We saw yesterday, for example, in the conference board, if you look at the details of that number, we did see that the gap between jobs hard to get or that's starting to increase, that jobs hard to get is starting to increase. So there are lots of different signals that the labour market is easing. So again, I wouldn't, if there was some sort of bounce back from the print that we saw early August, again, we need to look at that underlying trend and the fact that there are some signs there that the labour market is cooling, and therefore implications for wage growth and inflation going forward. Rates are still very elevated at the moment in the US, and probably too restrictive considering where we are, given unemployment rate is creeping higher. There are signs of a downturn.
How big a risk would Powell run if he delivered... There's a number of different risks which I want to kind of talk about. Is there a chance that inflation would bounce back if you start stimulating the economy aggressively? Are we sure that we're done with inflation? It tends to come in waves.
Yes, there's always a spectre might come back to haunt us. That is a risk. I think one key risk really is what happens next year, and really there's an election impact here.
Yeah, fiscal.
Fiscal side. I think in terms of monetary, if we have a path of 25 basis points consecutive over the next few meetings, that's not necessarily going to be stimulating demand, domestic demand. That's just moving from quite restrictive policies, trying to remove some of that restrictiveness. Really, if we are to see more inflationary pressures, it could come from the fiscal side next year, and that really depends on the outcome of the US election. And again, it depends on a few factors, whether it's Democratic or Republican, or if the Republicans get a clean sweep. So it really depends on the package of measures that can be delivered next year. So I would say this year, it looks like everything is on trend for disinflation. But next year, obviously, there could be some question marks in terms of the ultimate path.
Let's address that question from a European point of view. I was speaking to Michael O'Leary yesterday, runs Ryanair. He was saying that he thinks that actually we've seen some weakness in demand this summer because interest rates have been high. And he says if interest rates get cut, you may see some demand coming back. Is that why European central banks are sounding more cautious? Because they're not as convinced that the inflation genie is back in the bottle? Yes,
I think they are going to be. We do expect another couple of cuts from the ECB. Yep. However, it will be a more cautious pace. I think when they went in June, they'd all sort of talked themselves into a bit of a corner there in June. It was very difficult to navigate that press conference after that ECB meeting. So it's very clear. They gave a clear message of cautiously proceeding with easing path. The inflation picture there obviously a little bit more sticky. But there are, if we look at the overall growth picture, there are signs of weakness, particularly in Germany as well. So I think the case for easing is starting to build, even for the ECB.
Bank of England?
Bank of England, I think that obviously we had a very finely balanced rate decision last time, 5-4 vote, just about in favour. So I think clearly there's a lot of indecision within the bank and debate within the bank. We had some stronger growth numbers. The Q2 GDP was fairly resilient. And in terms of, the labour market there, again, there's some signs that things are starting to ease a little. But again, cautiously moving forward, a little bit more, and the same as the ECB, perhaps not perhaps a wait until November before the next cut for Bank of England. There is a greater case. Rather than for the US, it seems to be a clearer path. Let's say in the rest of DM, the easing cycle is underway, but at a slower pace.
And does it ultimately therefore go as far? How far can the Bank of England go? It's really interesting, there's housing data today saying that actually more and more houses are coming onto the market. People are expecting a revival in the housing market based on the idea that rates are coming down. Are we getting overexcited about how far ultimately rates will come down?
Yes, potentially that is a risk there. I mean, the pickup in the housing market is has been a bit sooner than you would expect. But I think that aside, I think for the Bank of England, we really have to, again, data dependency is a key quote, and that's something that's really going to be dependent on the labour market dynamics, wage growth as well. So really, the housing market is part of the signal of, people don't want to wait too long before they re-enter the housing market. But I think wages and labour market more key.
Sree, great to see you. Thanks for stopping by to see us. We really appreciate it. Sree Kochugovindan, Senior Research Economist, joining us from Aberdeen. Thank you very much indeed. What are we going to talk about next? The new HSBC's CEO could start his tenure next week with a management shake-up. We're going to talk about the details as to what could be happening here next. This is Bloomberg. So next week, we get a new CEO at HSBC. Georges El-Hadary is going to be taking over as chief executive. And our reporting is already suggesting that he's considering plans to remove layers of middle management at Europe's largest bank, which obviously has a huge footprint out in Asia. Our UK and Middle East finance team leader, Jenny Sree, joining me now. So this feels like the City playbook. Very similar to what Fraser's done. El-Hadary's going to come in, he's going to remove a layer of management, and he's going to cut costs. Why has he got to do that?
I think it's exactly right, actually, because we've definitely seen this at Citigroup. We've seen this at Standard Chartered more recently. And I think it's really just these banks that have these huge global footprints with operations in dozens of countries. As they're heading into an environment where interest rates are falling and margins are under pressure, they're looking at whatever way they can to kind of streamline operations, become more efficient in order to protect those shareholder returns that investors have,
How hard will this be? Fraser, it's been a battle for Fraser. So how hard will it be for El-Hadary?
I think it'll be interesting because there's a lot of different routes you can take with a restructuring like this. And I do also think another big important thing is he hasn't actually announced, what his team is going to look like, what his deputies are going to be. And so I think there's still a lot that's in flux, and it's still early days. Fraser went and kind of had to go the route of, heavy job cuts and really a painful reorganization. I don't know that HSBC necessarily has as much work to do on that front, and so it'll be sort of interesting. Does the reorganization look more like a fine-tuning rather than a big axe to the company? And I think that'll be the kind of questions that he has for his next set of leaders.
If central banks don't cut as much, does it make his life easier?
Yes, I do think, the other big elephant in the room really is how consumers navigate this new environment. So far, consumers, companies, they've been able to keep up with their debts. If that starts to change and if that side of the macro picture really starts to look worse, that's another big cost that will come into play for him that he hasn't really had to deal with yet.
Yep.
So right now he's really looking at kind of the embedded costs in the organization, the people costs, the tech costs. If those credit costs start to tick up, that's a new problem for him.
If we were to see this reorganization rolling out, does it continue to accelerate the move towards a stronger Asia footprint rather than anything else? This becomes a more Asia-focused bank.
I think that's sort of in the cards anyways. So we haven't gotten any indication that, Georges, who has been at the top of this company for many, many years now and has been in the room for many of those key decisions as that bank pivoted towards Asia. I think that's still ongoing. And from every indication we've gotten from the chairman of the company to the current CEO to now the new CEO is that will continue. And so I really think that a lot of this is around the belt tightening that we're seeing, not just HSBC have to do, but really every bank in this new macro environment.
Jenny, great stuff. As ever, great coverage. Thank you very much indeed. Our UK and Middle East finance team leader, Jenny Sree, on what is happening or will happen at HSBC. Coming up, with demand for travel slowing and airlines tracking a little bit lower, could this be a winter of discontent for Ryanair? Michael O'Leary, I spoke to him yesterday. We'll play a bit of that conversation next. This is Bloomberg.
Is they're still having production issues, challenges in Seattle. The supply chain is still challenged. Both Airbus and Boeing are struggling to get their monthly production rates up. But we think and hope that it will improve during the winter when they're under less pressure from aircraft for deliveries in the run-up to the peak summer period. Boeing have to start getting their production numbers up on a monthly basis and not have any more screw-ups like they've had in the last couple of years.
MOL, Michael O'Leary, talking to me yesterday, the CEO of Ryanair. We have seen fares maybe stabilising during the summer. He's talking about some weakness throughout the winter. But it's interesting, he talks about the fact that basically he's seeing costs coming down. So they're basically kind of running in tandem, costs coming down and maybe fares coming down as well. Share price reacting really strongly yesterday to what he said about maybe that stabilisation over the summer. Let's talk about some of the other stories that you're going to want to watch this morning. The Pentagon says an oil tanker attacked by the Houthis in the Red Sea last week appears to be burning and critically leaking. The vessel, operated by a Greek shipping firm, is carrying about 1 million barrels of crude. The Pentagon says the militants turned away 2 tugboats sent to help salvage this tanker. And the U.S. Special Counsel investigating Donald Trump is pressing ahead with prosecuting the former president on charges of trying to overturn the 2020 election. Special Counsel Jack Smith even, has updated his indictment after the Supreme Court ruled that Trump was at least partially immune from prosecution related to his official acts as president. The Republican nominee says the new indictment is ridiculous and should be dismissed immediately. And NFL owners have voted to allow private equity firms to buy as much as 10% of their franchises, loosening some of the tightest ownership rules in professional sport. Deals are expected to happen quickly, with firms including Arctos Partners, Ares Management and others vetted and approved already. Stakes could sell for as much as $1 billion. Coming up, we're going to take a look at the impact of Russia's invasion on Ukraine's industrial production. We're going to speak exclusively with the chief executive of the country's largest steelmaker. That conversation is next. This is Bloomberg. Wednesday the 28th, good morning. Welcome to the Pulse. I'm Guy Johnson in for Francine Lacqua. Let's talk about the top stories that we're watching for you today. The countdown has begun. We're counting you down to the Nvidia numbers, the world's most valuable chipmaker, reporting later today. Investors are betting on another blowout quarter. HSBC's overhaul. Bloomberg learns that the bank's incoming CEO is already considering cutting management layers when he takes charge of Europe's largest bank next week. Plus, seeking to steady ties, Washington's national security advisor meets the Chinese foreign minister in Beijing against the backdrop of an escalating trade war and geopolitical tensions. Talking of geopolitical tensions, let's turn our attention to what is happening in Ukraine, where the country's president, Volodymyr Zelensky, says he will present a plan to the United States to force Russia to halt its invasion. Moscow has been intensifying its assault on Ukrainian infrastructure over the last few days. This as Kyiv pushes deeper into Russia's Kursk region. Ukraine's steel industry has been targeted throughout this whole process. In the past, we've seen significant attacks, most notably, of course, back at the beginning of this conflict. The siege of Azovstal, the plant in 2022, was a huge story that everybody watched very carefully. Yuriy Ryzhenkov is the chief executive of Metinvest. This owns the largest collection of steel plants in Ukraine, and he joins me now for an interview. Good morning to you, sir. Thank you very much indeed for the time. Yuriy, the country has come under a significant attack over the last few days. The energy infrastructure has been at the centre of that. How have you fared through this process? How have your operations been affected?
Well, first, good morning. Yes, our infrastructure, the country infrastructure, has been under attack since spring this year, late spring this year, and we already have been relying on imports of electricity and on our own generation for operations of our assets. Unfortunately, the attack that happened on Monday did cause disruptions in our operations, but it's and most of the large industrial companies, they already have Plan B or Plan C and backup plans for operations under such attacks. As an example, for Metinvest, we have our own generation at our steel plants, which allows us to basically avoid any disasters, technological disasters, in case the power is cut off, and we can either orderly idle the facilities or wait until this electricity supply is restored. But in general, that's a very unreliable supply of electricity in Ukraine these days.
Yuriy, how much steel are you producing versus how much steel you produced before this conflict?
Well, if we're talking before the conflict, then our steel production was close to 14 million tons. At the moment, our steel production is closer to 5.5, 6 million tons.
Right, so let's call it circa a third, approaching a half of what you used to produce before. Where's it going? What's it being used for?
It's mainly going to the Ukrainian consumers. So we still have quite a significant machine building industry. We still have construction in Ukraine. Also, a large chunk of the steel goes to our European customers. It's mainly Mediterranean region and Eastern Europe, like Poland, Slovakia, and Romania and Bulgaria.
OK, so that's kind of the quantum of steel that's being produced and where it's going. If we were to see a peace deal, how quickly could you get back to the 14 that you were talking about before? How long would it take you?
Well, it's virtually impossible, to be honest, at this point in time, because this 14 million tons, that includes production of 2 large steel mills in Mariupol, which is Azovstal and Delitzsch, which have been completely destroyed. And restoring those mills doesn't make economic sense at present. We will be looking at building the new mills based on the green steel production, EAF or smelter-based, with decarbonized steel production, and that will be the future of the Ukrainian steel industry. By the way, at the moment, we're working on building such a mill in Italy, and that will be our pilot project together with our partner Daniele, which then can be rolled out once we start reconstruction of Ukraine and building new facilities in Ukraine.
Yeah. How much steel would that require? So I'm using 14 as my benchmark here. Is the country going to be a net importer or exporter of steel at that point? You talk about the exports at the moment, but will the country need more steel than currently is possible to produce?
Well, at the moment, Ukraine is a very low consumer of steel. We're talking literally about 100 kilos of steel per year per person in Ukraine. The benchmarks, if we're talking about Eastern Europe, range between 300 and 500 kilos per person per year, which means Ukraine can improve its steel consumption by about 3 to 5 times. Having said that, Ukraine exports about 80% of the steel it produces even now. So what Ukraine is producing now will still be enough for the internal consumption, even if it reaches the world benchmarks.
Does that include reconstruction? Does that include buildings? Does that include the infrastructure that Ukraine would need?
Yeah, absolutely. That includes all of it. I mean, if you look at the highest steel-consuming countries in the world, we're talking about South Korea, we're talking about some of the European countries like Czech Republic, then those countries have large machine-building industries, they have large appliance production industries, and they have large construction industries. Ukraine is in a good position to have all of those, and yes, it will have enough steel even at present levels to care for such industries.
Yuriy, I'm just out of interest, I'm curious to get your take on what is happening globally with the steel price. Iron ore prices have come down really sharply. China's got excess production capacity. We're seeing that on the water around the world. What is your read on what is happening here? Are we bottoming out here? Are prices potentially going lower from here? What is your take?
It's normal cyclical nature of the steel industry. It's been happening since inception of steel industry a couple of 100 years ago. It always goes in cycles. In our view, we're at the moment close to the bottom of the present cycle. We see that many producers, especially in China, they're already producing below their costs, selling below their costs, which means that we're pretty close to the bottom of the cycle. But as you know, anything can happen in the steel industry. We've seen amazing 2021, but we've also seen some very difficult years in the past in the steel industry. Hopefully, we're at the bottom of the cycle and we're ready to turn the corner.
Does your plans going forward from here, do the bulk of the production increases that you expect to see over the next few years come from within Ukraine, or, as you mentioned, the Italian plant? Do you see more production facilities coming online elsewhere? Do you see more partnerships? Do you see potential M&A in your company's future?
Metinvest still has the ownership of pretty good resource base here in Ukraine, in Kryvyi Rih, which can be improved to basically cater for the green steel production in Europe. And we are the source of the largest pure material for the green steel production in the European continent, on the European continent. So our strategy is both develop green steel products inside of Ukraine. Obviously, we have to wait until the war risks decrease considerably to allow us for large investments in Ukraine. And at the same time, we're looking at opportunities outside of Ukraine for building or acquiring new green steel facilities. One of the green steel facilities that we're looking to build is the mill in Italy. But we're also open to other opportunities, including M&A opportunities in neighboring countries.
Yuriy, we wish you well. We really appreciate your time and the amount of time you spent with us. Yuriy Ryzhenkov, Chief Executive of Metinvest, thank you very much indeed. We're going to turn our attention back now to what is happening with Nvidia. It's a big day. Numbers come out at circa 4:20 p.m. Eastern this afternoon. What should you be expecting? We will discuss that next. This is Bloomberg. So as I say, 4:20 p.m. Eastern is when the Nvidia numbers are anticipated to drop. Unsurprisingly, the stock is not doing much pre-market into that. We've swung around positive and negative for kind of the last hour or so. We're slightly positive now. But the options market is pricing in the potential for a 10% swing either way on the numbers that we're going to get a little bit later on. Ipek Ozkardeskaya, senior analyst at Swissquote on the stock now, joining us down the line. Ipek, thanks for the time. What are you anticipating? It's a huge day. What are you looking for?
Well, actually, it's a big day, and this is probably the biggest day of this earnings season. It's the season finale. Now, the market expectation is between 27 to 32 billion US dollar worth of sales from Nvidia last quarter. Nvidia itself gave a guidance for 28 billion US dollars, and we actually think that given the fact that the big technology companies have continued to spend big on AI, and given the strong results from TSM, the 30 billion US dollar mark for the second quarter sales is totally within reach.
Let's talk about the outlook. We've seen rumors, we've heard rumors that Blackwell, the next generation chip, there's some delays around that, but the sense seems to be that that's just a tactical issue, a short-term issue, and the demand for Hopper, the kind of current generation chips, are going to still be there and still be strong. How worried should I be about the delays?
Well, actually, Nvidia still does have very popular chips to sell and continue making money. Yet, we also know that the Blackwell issues means that they are expected to delay the launch of this next generation chips for at least 3 months, and that's due to design and manufacturing issues. And if that's the case, well, we could see that Nvidia itself could start altering their own forecast for the next few quarters and through 2025. And given the high market expectations right now, well, that could be an issue.
Do I buy on that dip, though? If there's any weakness on today's numbers, on its outlook, is that an opportunity to buy more of the stock, or is that something I should be running away from?
Well, actually, the current valuations are very high. So the PE ratio is about 75, and everything, the big AI story is already baked in. So obviously, we won't be seeing probably another 1,000% rally from Nvidia. That has never happened, or just very, very rare to see that. And right now in the market, we start just feeling a certain AI fatigue, especially from the investors of big technology companies that make up to 40% of Nvidia's revenue, who are not really happy with the return on investment on these AI investments, both in terms of the timing when these investments are going to start bearing fruit, and in terms of the positive impact on the profitability. So I believe that if we start seeing a sizable downside correction, I think that there is room for it to continue. But anyway, we cannot really give any bad call for Nvidia because we have seen extraordinary results over the past year and a half, but the risks are always there.
Well, you talk about that fatigue. When do you think, is there a sense amongst the analyst community about when AI is going to start making money? The hyperscalers are investing huge quantities at the moment. When is that going to deliver?
Well, that's the main question. So Meta, for example, said that, well, they need to spend more in order to get to a point where they will start seeing a sizable impact on their profitability. Now, we also think that that's the case because this is a revolution. It takes time to set up the right environment and make the right investment and the right level of investment. And this is basically why the big technology companies insist that they prefer overspending on AI rather than risk putting their dominant position at jeopardy. But we also know that they do have enough money to do that, to continue to spend. So that's one thing that's positive for Nvidia. But we still know that if investors start pulling out their money because they are fatigued, well, then the big technology companies will have to trim their AI spending plans, and that may pose a problem for Nvidia.
Nvidia feels like it's a monopoly at the moment. It's out in front. Everybody wants to buy its products. Are the others coming? When does it stop being a monopoly? When does it stop feeling like a monopoly?
Well, when you have this good profitability and good profit margins, we're talking about the expectation of 75% gross profit margin. Well, the other players are just stepping up their efforts to, well, at least compete with that. And we see that, like I said, AMD, Qualcomm or even Intel, which has been very, very behind the curve, but all these companies are now stepping up efforts to compete Nvidia. So at some point, sooner rather than later, we will see that this rising competition will start eating into Nvidia's profit margins.
In terms of who is buying, we've talked about the hyperscalers, the Googles, the Metas, etc., who are spending big right now. But we're also starting to hear about governments getting involved, Middle East governments in particular, Gulf governments with big, deep pockets that want to build an AI infrastructure story. Are we going to get a next wave of customers here coming into the market and continuing the story in terms of the demand picture?
Well, absolutely. I mean, the big companies are opening the way, and then you have this huge pool of other investors that will start coming in. So this is one part of the AI rally. So this will probably keep Nvidia's business going. Is this going to go to have another 1,000% rally in the stock price? I don't think so, but Nvidia will be fine and its competitors will be fine as well. The size of the cake will grow gradually. But the other side of the AI rally will be when we will start seeing the positive impacts of these AI investments on companies who actually invested in them. So we are looking at Google, at Meta, the big data holders. And that, I think, is going to be the next big thing in the AI rally. The day we'll start seeing the impact of the AI spending if it's good enough.
And Apple, with its event coming up at the beginning of September, we want certainly to watch out for there. Who else in the ecosystem should we be paying attention to? Nvidia can't do this on its own. It needs to have an ecosystem around it, the ASMLs, etc. of this world, the TSMCs. If Nvidia does well or badly today, what's the read across into those other stocks?
Well, obviously, we have seen that these other stocks have been rallying as well. Nvidia is just designing its chips, and someone has to manufacture it for them. And Nvidia has made this decision in order to only design and not care about the manufacturing of their chips so that they could focus on other aspects of their offering, like offering an ecosystem and a platform where people could actually build what they need for their AI needs. So I really believe that because Nvidia has made this choice and it has been a good choice, that's could be a good way to go for its competitors as well. So all the ecosystem, the supply chain will continue to benefit big from it.
Ipek, great stuff. Thank you very much indeed for the update, for the outlook. Ipek Ozkardeskaya, senior analyst at Swissquote Bank, joining us from Geneva. Bloomberg's got some great coverage coming up a little bit later on. We're going to be sitting down exclusively with the Nvidia CEO, Jensen Huang. I say we, I mean Ed Ludlow. Bloomberg Technology, a special 11:30 p.m. UK time, a little bit later on today. Coming up, we're going to talk about geopolitics. Jake Sullivan is in China. He's there to try and steady ties with Beijing. Chips, the war in Ukraine, the South China Sea, all in the discussions that we're going to be seeing happening there. We'll talk about what we should expect next. This is Bloomberg.
President Biden has been very clear in his conversations with President Xi that he is committed to managing this important relationship responsibly.
Over the past few years, bilateral relations have gone through twists and turns. The key is to keep the overall direction of mutual respect, peaceful coexistence, and a win-win cooperation. Implementing the common understanding between our two presidents as their San Francisco meeting is our important responsibility.
The U.S. National Security Advisor Jake Sullivan and following him, the Chinese Foreign Minister Wang talking about the importance of their meetings that are taking place in Beijing. Jill Deeses joins us now, who is covering this for us. We got talks yesterday, talks continue today. What are we expecting?
Yeah, well, at this point, I mean, there's a lot certainly under discussion here. They actually started meeting at about 9:30 local time this morning. That's 2:30 UK time. So, I mean, really just all days of meetings on all sorts of topics. The U.S. kind of wants to push China a bit more on its support of Russia's involvement in the war in Ukraine. There's a bunch that's on the agenda in terms of talking about tariffs on semiconductors, other advanced manufacturing manufacturing goods, sort of this U.S.-led push to kind of curb a lot of China's advancements in those sorts of technologies. Probably going to be talking a bit about the South China Sea, military incursions there, those sorts of concerns. The Taiwan issue, of course, the democratically run island that the U.S. supports, but which Beijing claims it's its own territory. So, I mean, we're really, really running the gamut here. I think for both sides, though, Guy, you have to consider this as a, they really just kind of want to stabilize things at this point. I mean, there's the U.S.-China relationship has been really, really rocky over the years. We saw things really kind of boil over about a year and a half ago under the Biden administration that led to pretty much a period where neither side was really talking at all. We've now sort of restarted things here to the point where Wang and Jake Sullivan actually meet fairly regularly every few months or so, although this is Sullivan's first trip to Beijing, first time that we've seen the national security advisor in China since 2016. So I think at this point, its stability is kind of a major priority for both sides.
Am I correct in thinking that Biden's never been to Beijing? And is this the prelude to maybe that happening?
Well, look, I mean, Biden hasn't been to Beijing as president, right? I mean, Biden as vice president certainly, visited China. I will say that, no, I mean, he hasn't been, obviously, the pandemic sort of, potentially maybe curtailed some of that, although we obviously can't discount the idea that some of that is maybe related to tensions. Whether this actually results in maybe a Biden trip to China, not sure. I mean, he is at this point the outgoing, president, no matter what, considering Kamala Harris is now at the top of the ticket for the Democratic Party. But what I think it could potentially portend here is maybe a Xi-Biden meeting at some other point. There's a big forum later this year that they could potentially meet on the sidelines of. Maybe we see some kind of action there between Biden and Xi before the end of the year.
As you say, and I was incorrect on this, President Biden has not been to Beijing. Vice President Biden has. Obviously, he had a big geopolitical story before he became president. Jill, great stuff. Thank you very much indeed. Jill Deese is joining us on that Jake Sullivan trip. It is Nvidia Day. We are watching those earnings. We've got a great conversation coming up with Jensen Huang a little bit later. Manus Cranny is going to pick things up from here. It is time for the Bloomberg brief. This is Bloomberg.